Did you know that DJ Vlad openly admits he would clear absolutely zero profit if he paid Boosie Badazz $35,000 for a single interview? It sounds like a harsh corporate calculation for a partnership that has lasted over 2 decades, but it is the cold, hard arithmetic governing modern, independent hip-hop media. For years, the digital relationship between Vlad TV and the Baton Rouge rap legend was considered the gold standard of internet syndication. Every few months, Boosie would fly to the studio, sit across from Vlad's unseen microphone, and deliver unfiltered, high-stakes commentary that instantly turned into viral multi-part segments. To the public, it looked like two close associates sharing the wealth of millions of views. To the back-end analytic dashboards, it was a volatile business model running on a ticking clock. The baseline of their long-term agreement was structured around a flat rate of $25,000 per interview session. For the average creator or emerging independent artist, $25,000 for a few hours of conversation sounds like an astronomical payout. However, within the high-stakes economy of American pop culture, that number quickly became a source of systemic friction. Boosie Badazz is not a typical internet personality. He is one of the most raw, emotionally volatile, and legitimately survival-tested voices hip-hop has ever produced. He has survived federal indictments, severe health battles, prison sentences, and intense industry blacklisting. When he speaks, his audience doesn't just watch for entertainment. They tune in for raw, unedited survival philosophy. Because his interviews consistently generated the highest retention rates and millions of cumulative clicks for Vlad TV, a structural shift in valuation was inevitable. From Boosie's perspective, his content was the primary engine keeping Vlad's subscription base active and engaged. He watched smaller platforms rise by mimicking the Vlad TV format, and he observed the massive ad revenue numbers being generated across the podcasting landscape. In his mind, asking for a raise to somewhere between $30,000 and $35,000 per sit-down was not an act of greed. It was a basic acknowledgement of market value, a standard contract renegotiation for a legacy asset. Simultaneously, the view from DJ Vlad's calculator looked radically different. Running a massive digital media corporation on YouTube is not a simple matter of pressing a record button and collecting automated AdSense checks. The operational overhead of a professional media house involves deep structural costs. There are multi-camera studio setups, high-end lighting grids, continuous travel expenses, premium audio engineering, and a full-time staff of editors who work around the clock to slice single interviews into 20 separate optimized clips. Every single production cycle carries thousands of dollars of direct financial risk before the platform ever sees a single dime from a sponsor or a YouTube monetization layout. Vlad's resistance to the price hike was rooted in a structural profit and loss ceiling. According to his public balance sheet statements, paying an artist $35,000 upfront completely breaks the monetization loop of an individual interview package. If the view counts do not hit exceptional historic metrics every single time, the platform actively operates in the red on that specific project. Vlad made his position entirely transparent to the industry. He explained that he was taking 100% of the upfront production risk, dealing with fixed studio overhead expenses, and managing high-end multicam editing costs, so he simply could not justify a corporate payout that left his own platform with a net zero return while the guest took no financial risk at all. When a contract negotiation fails in the corporate world, it usually ends with a polite, generic public relations statement or a quiet mutual departure. But in the world of raw street rap, business disputes are immediately litigated in the court of public opinion. Boosie Badazz did not issue a press release. Instead, he turned on his phone camera and initiated an explosive, unedited live stream directly to his millions of global followers. Sitting in front of a basic household setup, Boosie laid bare the entire financial breakdown of his relationship with Vlad TV. He told his audience that after 20 years of loyalty, after providing the platform with its most historic and culturally defining moments, the corporate response to his value expansion was a hard, uncompromising refusal. He didn't just announce his departure, he actively challenged the structural monopoly of major interview platforms. He pointed to his basic home recording equipment and announced that he was launching his own independent interview platform, believing he could monetize his own raw voice without a corporate gatekeeper, taking a massive cut of the back-end equity. The American pop culture landscape instantly fractured down the middle over the announcement. To a significant portion of the hip-hop community, Boosie's public stand was seen as a heroic moment of economic independence. For decades, Black artists have historically pointed to a repeating pattern in American entertainment where their raw stories, street trauma, and cultural capital are systematically monetized by outside platform owners who retain the long-term equity of the master footage. To these viewers, the fact that Boosie was capped at $25,000, while his real-world pain generated millions of programmatic ad impressions for a third-party platform, felt deeply exploitative. They argued that an artist should always own the platform that distributes their narrative. Conversely, the analytical side of the media industry viewed Boosie's independent pivot with extreme skepticism. Building a sustainable media platform from absolute zero is a profoundly different discipline than walking into an established studio as a celebrity guest. The value of a platform like Vlad TV is not just the physical chair the guest sits in, it is the built-in ecosystem of over 5 million active subscribers, an optimized distribution algorithm, established relationships with global corporate advertisers, and a dedicated production pipeline designed to keep videos ranking in search engines for years. Commentators across media forums pointed out that celebrity-driven independent channels frequently suffer from rapid audience fatigue once the initial novelty wears off and the brutal reality of daily content management sets in. DJ Vlad's response to the public blowout was a masterclass in detached, data-driven crisis management. He did not engage in emotional social media mudslinging or issue aggressive legal threats. Instead, he sat in front of his own camera and broke down the reality of the situation using standard business analytics, separating the personal friendship from the corporate structure. Vlad pulled back the curtain on the actual performance metrics of the channel, revealing a detail that most casual viewers completely overlook. Audience fatigue is a measurable statistic. According to his internal dashboard data, Boosie's specific viewership metrics across the platform had actually experienced a steady decline of roughly 10 to 15% over the preceding quarterly cycles. The market was becoming saturated with long-form hip-hop interviews, and the hyper-repetition of the format was beginning to yield diminishing returns. Vlad's core argument was simple. It is commercially impossible to grant an artist a massive 40% increase in upfront compensation at the exact moment their real-world viewership metrics are experiencing a double-digit downward correction. This contract renegotiation wall highlights the permanent cultural divide between two completely different asset classes: cultural capital and mathematical reality. To Boosie, his value was tied to his legacy, his personal loyalty, and the reality that he had spent decades defending Vlad's platform in rooms where Vlad's cultural authenticity was actively being questioned by the Black community. To Vlad, value was a cold equation on a spreadsheet, views divided by production costs, multiplied by CPM rates. When those two distinct worldviews clashed, there was no middle ground to be found, because both men were speaking entirely different economic languages. The structural reality of Boosie's market value was put to an immediate test when rival urban media platform SayCheese TV entered the negotiation space. Recognizing an opportunity to capture a historic legacy guest, the platform reportedly extended a formal offer of $15,000 for a single, long-form sit-down interview. Boosie rejected the contract immediately with intense public hostility. To an artist who had been comfortably operating at a $25,000 floor for years, a $15,000 offer felt like a deep professional insult. He publicly asserted that his name, his brand longevity, and his real-world cultural impact were far too immense to ever clear a stage for that level of compensation. He maintained that his financial stability was completely secured by his live touring dates and direct merchandise sales, meaning he had absolutely no structural dependency on podcast networks or media platforms to sustain his lifestyle. When Vlad analyzed this alternative offer on his channel, he offered a deeply analytical breakdown of the independent content trap that many legacy artists fall into. While validating that $15,000 was objectively below Boosie's true market standard, Vlad challenged the widespread assumption that independent self-released content naturally yields higher long-term dividends. He pointed directly to the early performance metrics of Boosie's self-produced YouTube content. Without the massive algorithmic engine of an established media network backing the uploads, the raw engagement numbers were struggling to hit even a fraction of the views they routinely achieved on Vlad TV. Vlad went a step further, offering an unexpected strategic roadmap for independent artists navigating this specific media landscape. He advised Boosie and creators like him to abandon the pride-driven pursuit of a single monolithic payout and instead adopt a volume-based syndication strategy. His advice was to execute multiple deals across a diverse range of mid-tier platforms, taking $15,000 from one outlet, $20,000 from another, and spreading the content footprint across the entire digital ecosystem. By stacking multiple upfront payouts across competing networks, an artist can easily surpass their original financial targets without forcing a single platform to break its own operational ceiling. It was a sophisticated piece of industrial advice, demonstrating that despite the intense public split, Vlad still possessed a deep analytical understanding of how to maximize celebrity equity.